Hey everyone, welcome back to AlphaLens Investing. I'm excited to bring you a full deep dive on Apple, ticker AAPL, one of the most watched and important stocks in the entire market right now. With fiscal Q3 2026 earnings scheduled for July 30th, the stock has staged a very impressive rally, adding roughly $650 billion in market value from recent lows. Today, we're going to run AAPL through several of our AlphaLens frameworks to determine whether it's truly a buy heading into this important earnings report. We'll look at the company fundamentals, bull and bear cases, fair value, earnings quality, and the long-term investment thesis. Let's start with the full company breakdown. Apple remains the undisputed king of consumer technology. The company currently sits at a market capitalization of around $4.6 trillion. One of their greatest strengths is that massive installed base of over 2.5 billion active devices worldwide. This creates an incredibly sticky ecosystem that generates recurring revenue year after year. While the iPhone is still the primary revenue driver, the real growth story is in services. This high-margin segment continues to deliver record after record. In recent quarters, we've seen strong performance from the App Store, significant growth in Apple TV, plus, with a huge number of Emmy nominations, expansion in gaming through Apple Arcade, and continued momentum in Apple Music and iCloud. Geographically, Apple is performing well across every major region, including a solid rebound in Greater China. Now let's move into the bull versus bear analysis and talk about the competitive moat. On the bull side, there are several strong positives. Apple has repeatedly demonstrated excellent price elasticity of demand. Even after implementing price increases on Mac computers, iPad tablets, and other hardware due to rising memory costs, demand has remained resilient. Wall Street analysts are largely bullish on the name. JP Morgan recently raised their price target to $345, while Citi moved theirs up to $365. The street loves the ongoing services momentum, the aggressive share buyback program, and the upcoming rollout of Apple Intelligence features across the device lineup. Longer term, there is growing excitement around a potential premium foldable iPhone Ultra expected in 2027. Reports suggest production targets have been increased and pricing could land between $2,500 and $3,000. On top of that, Apple recently signed a major multi-year chip agreement with Broadcom worth over $30 billion. All of these factors represent meaningful tailwinds. On the bear side, there are valid concerns. Higher hardware prices are coming at a time when inflation continues to pressure consumer spending. Memory costs are rising sharply because of AI server demand competing for supply. China remains somewhat of a wild card, with reports of softening demand in certain categories. Regulatory scrutiny in Europe and the competitive threat in artificial intelligence from companies like OpenAI are also risks worth watching. Finally, the stock trades at a premium valuation, currently over 35 times forward earnings. Despite these bearish points, Apple's ecosystem moat is one of the widest and deepest in the entire technology sector. The switching costs for users once they're invested in the Apple world, with iMessage, FaceTime, Apple Pay, and the seamless integration across devices, are enormous. This gives the company tremendous pricing power and customer loyalty. Next up is our fair value stress test, combined with the earnings quality analyzer. Consensus estimates for the upcoming Q3 report call for revenue of approximately $109 billion, representing 14 to 17% year-over-year growth. Earnings per share are expected around $1.89, up more than 20% from the prior year. If Apple beats these numbers and provides strong guidance, especially around services and AI, the stock could see a significant positive reaction. From an earnings quality perspective, Apple scores very highly. They have delivered consistent revenue and profit growth over many years. The balance sheet is fortress-like, with substantial net cash. Free cash flow generation is excellent, supporting both a healthy dividend and aggressive share repurchases. The company just authorized another $100 billion buyback program, and the dividend has a strong history of increases. Technicals also look constructive, with the stock having broken out recently and holding above its key moving averages. Overall analyst sentiment sits in the moderate buy category, with average price targets pointing to upside in the $340 to $365 range. Finally, let's look at the long-term investment thesis and portfolio fit. Apple is successfully transforming itself from a pure hardware company into an indispensable services and ecosystem powerhouse. The rollout of Apple Intelligence, deeper AI capabilities across their devices, potential new form factors like foldables, and continued expansion of the services business should support durable growth for the remainder of this decade and beyond. Even trading at a premium valuation, the combination of unmatched brand strength, industry-leading cash generation, and a proven innovation track record makes AAPL a high-conviction core holding for most long-term portfolios. It provides defensive characteristics during market uncertainty while still offering meaningful exposure to growth themes like artificial intelligence and premium consumer technology. Key risks to monitor include successful execution on the AI roadmap, potential margin pressure from rising component costs, and any signs of demand destruction due to higher product pricing. So bottom line from AlphaLens, AAPL currently looks attractive, heading into earnings. The recent rally appears well supported, services momentum is real, and the long-term setup remains very compelling for patient investors. Of course, this is for educational and informational purposes only and is not financial advice. Always do your own research and consider your personal situation before making any investment decisions. What's your take on Apple right now? Are you bullish heading into earnings, or are you sitting on the sidelines waiting for more clarity? Drop your thoughts in the comments below. I read every single one. If you want the complete 15 framework AlphaLens analysis on AAPL or any other ticker, head straight over to NorrisAI.us. You can try it free with a trial code. The latest codes and links are in the video description. Thank you so much for watching. If you found this analysis helpful, please give it a thumbs up, subscribe to the channel, and turn on notifications so you never miss future updates. I'll see you in the next video. Until then, stay sharp and invest wisely.